Hey, greetings, traders. It's Samantha LaDuc, founder of LaDucTrading.com. It is a rainy Tuesday near Boston on this Tuesday, the 22nd of June, and I'm very glad that you showed up to talk a little market structure. I am joined by Jonathan Gibbons, founder of VigTech.io, and we've got lots to cover today on the sentiment span. We're going to do this on Tuesday this week and next week. Then we're going to go every other for July and August. So I just want to do a little housekeeping before I bring them in. And basically, this is macro to micro power hour. So when this recording is done, it's going to be uploaded to my YouTube channel under this macro to micro power hour. It's both a webinar and a podcast. So look for it in your usual suspects, Apple, Spotify, Audible, and the like. This is definitely a sentiment driven market, and I want to invite Jonathan in to talk a little bit more about what he sees in his options matrix flow. And Jonathan, let me invite you in. Let's get you into the hot seat so you can tell us what you see. You're live. Welcome. Congratulations, you launched your mobile app.
Yeah, it's good. It's out there.
It's
It's
out there
good.
and it looks great. So,
Yeah, it came out great. A lot of people are liking it a lot. So that's great. That's
yeah,
a it's a big plus. We've been working on it for a while.
you've been working on it for a while. Yeah, doing God's work. So this is really you have probably to the end of the year, and you'll no longer be under the radar. You'll be a household name. The retail option trading extravaganza will have no idea what hit it because
Yeah.
you're gonna come in with some flow, and people are gonna be like, "Oh, this is so real time, so much data that is it just it all other platforms dwarf it." And then, of course, these scans are to die for. And that's what we're going to talk about, the sentiment, right? This is really, this was the theme this week in regards to, yeah, sentiment flows. And Jonathan knows a little bit about this since he is really good at identifying option flow and also kind of sentiment. And I want to know more about what you were talking about when you said this is really becoming hot, and Swaggy Stocks is one site that folks
hmm
may be familiar with. Talk a little bit more about that as well, because this is driving the market, this sentiment.
Yeah, I mean, we were talking about things this week to kind of touch on, right? And I think one of the things that's really big today is not just like, you look at just options flow. And, I've always been a flow kind of concept drive trader, right? We talk about market structure at the levels of the market from the auction purposes. And then you have the actual money flows like in and out of the market. Not just options, but like actual, securities, underlying security. That's blocks. We've been tracking blocks forever. Everybody, a lot of people do. And so large size trades and the direction of those large size trades, and we put those in our charts, a long time ago. And then you're looking at the momentum, right? The flow of momentum. So like velocity, right? So like, it's just one thing if you have 10 trades that are of size. Well, what about 100? Does that tell you something else, right? So if you have 10, it says something. But if you have 100 and high volume, and the volume's steady into, right, buying instead of for sale, right, that tells you something. So that's a flow of activity. And then you have the options flow, which we put onto the charts, right? You have like gamma exposure, and you have open interest, and you have executed distribution, for example, for options. The levels, do those match, right? And now you're looking at like the actual options themselves, right? And what did that flow look like? So what's the discovery of that, right? So you can see the differentiation in the options from last week to this week, from 2 weeks ago to this week. Is there something that's really sticking out? Why is it sticking out, right? That's a flow. And now we have this sentiment flow,
Mm,
right? That's social media. And back in the day, I think that really they'd say like there was always chatter, right? You call it like, insider trading, right? Maybe people heard about this, or, there's word on the street of that. I think that's changing, right? In the sense that it's so interconnected via social media that we all are, like, it's in a lot of facets of our life, not just the markets, but like so many things are interconnected because of the social networks, right? And nodes, right? Right. Nodes are a big thing. So it hits a node of influence and hits another 20,000 people. And then a
But
node,
the
one
speed
of
at
those
which
is,
it travels now is so much faster. I mean, I remember reading
yeah.
Seth Godin, The Purple Cow, and
Hmm.
the tagline is basically ideas that spread win. So, how to get your idea, your product, what have you, your company brand out there and have it spread so that you can obviously, have the results and the fruits of that labor. Now it's warp speed in regards to
Yeah.
social networking, and it's a thing. So measurement, that's what we're talking about. But
Yeah.
you
Yeah.
did a good job of kind of setting the stage of like
Yeah.
our
So
sentiment
like,
flows.
yeah, which is the discussion, right? And that's the discussion, and looking at it, and kind of beginning to look at that. And some people have referred to it as alt data, right? Like alternate data, where you're looking at things that weren't even discussed prior to social media and the mobile phone, right? And so now, not only do we need to take these things into account, we need to find ways to augment our trading, augment our investing, so supplement ourselves
Mm-hmm.
using these measurements, these metrics. Because to ignore it is
So
to ignore large potential purchases, right? Of order flow, right?
explain
Because
what you mean by the alt data for the geeky, for the non-geeky in the crowd.
okay, so you've got alt data, it's still new, right? So alternative data, like, we have in our app, we get all the fundamental data. So
Mm-hmm.
reference data, earnings per share, um, like return on equity, performance, rolling returns, worst rolling returns, best rolling returns. Those are all metrics that you would consider fundamental analysis or technical analysis, deviations from the mean, et cetera, et cetera. Like that's all static, reference data or technical data. Alternative data is data that's never really been utilized in that context. So maybe new, or maybe just, something that's not necessarily new data, but is just new to the scene of considered to be useful data, right? So
Okay.
so let's look at the two different things. So you've got alt data being like sentiment measurements, like Swaggy Stocks is
Yep.
awesome. He's got great stuff. We're working with him right now to put some stuff in for measuring, what is the chatter amongst social media, what is being discussed, the words et cetera. That's something. And then you've got let's call it some folks do a really great job tracking the senators,
The
right?
what?
And what they're the senators and the
Oh,
politicians
okay.
and
Okay.
the House members who are purchasing what they're purchasing, right? And so
Yeah.
because they're privy to certain sets of
Insider
information,
information.
right?
Yes.
Or coming down the pipe legal information. And so that has never been something that was like readily available
Public.
on the internet, right? Like it
Public
was
input.
always public,
Yeah.
right? But it was like you'd have to go down and like actually mine that and figure out how to get it out 10 years ago, right? Well, now it's like you can
So
go look and check
explain
it out.
explain the retail component of this. It's almost as if the alt data has been slowed down enough for the retail to jump on because there has been many years of algos triggering off a news press release, a particular theme by a Fed announcement or a politician on a bill or what have you that would immediately cause a knee jerk reaction, right, in buying or selling. It's just quick, very,
Yeah,
very
yeah, yeah.
quick. So that's not something that you're referring to. You're talking about the cumulative social narrative that builds and builds, like the Google searches and those,
Yes,
okay, keywords.
yes,
Like
yes,
you're
yes. So
tracking the Wall Street bets, the top 10 names that are getting discussed, or you're tracking the ARC, themes or memes.
yeah, yeah. I mean,
Okay.
effectively, like you've got, so let's say the high frequency trading triggered off of a news press release, right? So, if Powell says transitory, sell X amount of right? So like That's
Triple
stuff that
bonds.
like we've all been joking about for like 5 to 6 years, right? Like
No,
if he
no, we're
says,
not joking. It's
right,
real. There's no
drink,
doubt in
drink,
my mind. It's real. But the
we
point is
play a
how to
drinking
play it.
game, right? We
Yes,
play a drinking game.
exactly.
How many times is it transitory before the first 30-second mark? So like you look at those high frequency things, those are triggers,
Hmm.
right? That's not sentiment per se. That's perceived outcome based high frequency action.
Yep.
This is truly like a new thing that has to be taken very, very seriously and incorporated into the investing cycle, because
It's so
you have
new though,
so
because I
many
remember
people,
a hedge
right?
fund had bought a firm that, focused on, the frequency in Twitter, right, of certain key stocks and the like. So they were trading off this, this buzz. I think it actually was called Buzz something. Anyway, that was a few years ago. So it's so old it's in, like they've perfected
Yeah.
it now.
Well, yeah, I think where I'm going with it specifically is how many people are now participating and how many people are socially participating in the markets, and then sharing the ideas. And we're in a sharing economy or a sharing, conceptual marketplace where we like to share ideas. And like, y'all just fired that Discord out,
Yep.
and it's going great. And so many people are coming there, and it's an awesome thing because you can share and spread ideas. And that then can't, multiply that exponentially by all the people that are, participating in the market. And then what are they discussing? And then what direction do they think? And what's the perception? Because ultimately, what is something worth? It's worth what somebody's willing to pay for it based on the auction, which goes all the way back to market structure. So you loop this all the way back. And so if there is a narrative that's driving something, right, that can be very strong and be driving the auction, right? And that then would circumvent or totally eviscerate the reference data, right? And so we're talking about GME, right? We're talking about AMC. We're talking about what's been denounced, known now as meme stocks. It's a sentiment flow. And then once the sentiment flow starts heading that direction, the options flow, right? It's the chicken and the egg, right? Is it the options flow that triggers the sentiment flow? Is it the sentiment flow that triggers the options flow? There's no real way to determine that, right? But you need to be identifying both, right, at all times, because now so many people communicate constantly and share information. And where you could have in the past front run something by having inside information, is it becomes harder and harder. Now, to people talking about right now, like you can manipulate it more because you can manipulate the narrative and the sentiment, right?
I
And you
think it
can
also
kickstart that, right?
it also suits a particular style of new trader. So the new trader is much shorter duration, less experience. So they have kind of a tighter, if you will, anxiety over the duration. They haven't built up the experience set to know kind of that aura of volatility, how long to hold, when to fold. So their duration is much, much shorter. And they like this adrenaline. I mean, this is typically how folks come in as day traders, and then they gain a little bit of experience, right? Then they become swing traders. Then they go back to real life and they become trend traders. So,
Yeah, I think the even the journey, right, for an investor, whatever that cycle would be, is even more amplified today because you've got much more information than you've ever had available,
oh, it's
right? Like
wonderful.
even 5 years ago. And the stuff we're doing is hard to do 6 years ago, 7 years ago, because of the computing power was continually improving. And we punch out a lot of data because of the ability of, compound server capacity, et cetera. So like these things are so like coming to the fold. It's just going to make it even more interesting. And then also more things are available to trade. Like you think about Clover Health, right? Like what an interesting dynamic, like where I think ultimately you'll see more of this, where you got these things that come to market long before they would have before. And so they're attracted to as a securitized asset, right? So it's just an asset that's being traded. What exactly is Clover Health? Well, Swaggy Stocks did a great write-up on, what is it? Like, what is the pros and cons of it? And what's the real story behind it? where, Clover Health has like 50,000, I think. I want you guys to hear me out on this. 50,000, right? Like covered lives or something to that effect. Okay. Right. And it's moving in, major moves in the market constantly, like in top 25, 50 in options contracts traded. Spotify has 364 million users any given day. 364 million users on any given day. And Clover Health will move around more than Spotify, right? So are we talking about like fundamental reference data or whatever? That's my primary thing about sentiment that I was going to like point out. It's like sentiment's so big and important now to measure. And like we're all like trying to create better tools for measuring it and tracking, that if you deny the fact that sentiment is a huge part of this market, you're just simply ignoring it. Because you
But there's
look
a
at that.
danger to that too. So a case in point, I have to show it because it just happened yesterday.
Talk to us about the cons of sentiment, right? Like the pros are that it's great action. The cons are that it's not necessarily real action, right?
Correct. So this is like, for example, yesterday, GBR, a client in my trading room said, what do you think about this? And I'm like, you know what? It's got a really nice chart. But OMG, 4 to 34, at some point when this triggers again, it's going to be a lovely long, but how to get out. So it's that same situation of that looks great. This is one of those, I don't want to, it's the sentiment flow. All of a sudden this took off through the trigger and exploded higher, but then it opened 50% lower. So getting in, you have to go in so quickly. And then how do you get out? Because this parabola that I love your expression, for months we've been talking about it. Parabola equals trapped longs, which equals a liquidation event. So you can have some fabulous moves like the clove, which also shot up like hot fire flames and then collapsed in equal, dramatic effect. So that's the downside of it. And then there are many, many trapped folks in there that don't realize this really important issue of Hotel California. You can check in anytime you want, but you really may not be able to leave. So that's to me that's the downside.
Okay, well, so let's look at like let's look at this. I'll share my screen. You'll have to let me know.
I'm doing that now. Hit it.
Okay, you guys can see my screen. Should have clove on there.
Yes.
Okay, all right.
Perfect example.
So this is a good example, right? Like of what you're describing, right? And so this went from $6.50 to $28, right? And it went fast.
And that's GBR went from $5.70 up 90% in one day.
Okay, so the power, the power of the moves, right? And if you look at most of these in the column here, right? This is an index I created, just tracked basically these sentiment chatter names, right? So these I call the Wall Street Bets Index, but you call it anything you want. It's just a chatter index, and these are regularly talked about names in some sectors and spaces that people are finding to be, highly not necessarily speculative, but just really, really interested in, right? Like gaming and EV stuff, like you were talking about EV stuff earlier today. You got GameStop, apps, right? Apps has been killing it for a long time now, right? So it's not necessarily all Momo stuff. It's actually just like names that people find. And one of the things that you want to think through is that people, especially, I'm a millennial, but like millennials and Zs really like to invest in things they know, they see, right? So like I'm familiar with that brand, and that's something that's really playing into trading. Nowadays, I'm familiar with that brand, and everybody else is familiar with that brand. We're talking about that brand, the chatters around that brand, and all of a sudden the options activities around that brand. So let's look at Plug as an example real quick. So Plug's sitting here, and Plug was really like kind of there was a lot of chatter about it, discussion about it, and the chart actually starts looking pretty good, right? The last couple of weeks, like where you got back over the pivot, it was sitting on a decent volume node. And the flows were inbound, and then all of a sudden, the last couple of days, we've had tons and tons of options activity flying through on the matrix side, you could see the different alerts popping up, what have you, but you could also see the options flow. And then sure enough, you got a pretty big move today. This is like, and this is this parabolic move, right? Which, what Samantha was referring to is parabolas equal trapped buyers. So anybody that was buying here on this chase, very much so got blown out from, there was too much supply here and not enough demand. So the market itself came back for everybody watching to like fill this void, because this was chased exactly like she's talking about, and it was not verified. So the market wants to smell this out, right? There was more sellers up here than buyers, and effectively accumulation took place back here, right? And then distribution took place up here.
Now,
And you find
question,
a
down
nominal bounce
below.
here.
Yeah,
Yeah.
down below on your money flow, I can't actually see it. What's the pink? That
The
pink
pink is
shaded area.
that's volume flow. So that's the velocity of
Okay.
volume. So it peaked out, right? This was a strong move, but it apexed. So this was chased heavily, but you had huge gaps in the option. So
Yeah.
you wake up one day and there's a 25% hole in the auction. Well, what happens is that remains for sale. And if you guys understand how the market works, is that just remains for sale forever, right? Because it wasn't bid. And they say fair value gaps. We wrote a whole bunch of stuff on that. But effectively, you got to be very leery of these types of holes in a market structure, because they weren't tested. That means it went to sleep this day and it woke up the next day at that price. It didn't come in here and even touch it. It came back down here. You see this wicking candle, right? It came into here and it filled this void and came right back, but it did not continue, right? And then it came back down and tested all this. So the real zone for like plug, the fair value is where this volume point of control is, right around $25. And that sits in that whole zone for a period of time. And not to get into like a whole bunch of market auction theory or anything like that, but effectively, what Sam is referring to is this spike being unhealthy and hard to chase, and sentiment can push it. And then what I'm referring, and get kind of dangerous, right? Because that's an unsustainable move from a demand side. There's more supply and people are going to sell that.
Yeah.
But then the flip side of that is, this is a name. This is a product that people are onto. They believe in it. They're talking about it. The sentiment is there for it. And then once the flows come back to it and the options come to it, here we go again, right? And we're back down. And this was a retrace of 75%. That's like a huge retrace, right? Seeing how it was up, pretty significantly, like almost 500% to that retrace. So like, this is like, if you look at what you're seeing a lot in the market, this looks like a typical accumulation distribution kind of boom bust cycle pattern, where you've got a quick or basically a cycle boom, right, with a cycle bust, and this is all happening real fast, right? With this would typically have been years, right, to play out. This is playing out in 3 months, right? 3 months up, 3 months back. So things are just moving in a lot faster clip. And that's because the more liquidity, the more people participating in the market. And you can look at most of these charts, like they're very, very similar to an extent. Like if they get extended, so what I would say the takeaway for me is like your point being exactly right. When this like becomes like exponential, these moves are unsustainable, and they become trapped longs. Like I got in and it's got to go higher, but there's a lot of people that bought it a lot lower. They're ready to get out. And so there's more of them than there are of you. And then it comes back and it retests. But once you get to these levels where things start settling in and there's fair value, then you're just watching the sentiment, you're watching the options market, you're watching the flows, and you should be able to kind of eyeball these changes. And this can go on, and I think this goes on for a long time. Like, and it's probably a new form of market action that we're going to get used to. So it's very, very important to take it into account. We've got the money flows, we've got the volume flows, we've got the momentum, right, on an ongoing basis, and we've got the options. What we want to put in is the sentiment, because I think if you could track the sentiment along with this too, it's extremely useful, because you can kind of get an idea if this is really something that's like being spread through the social node network. And
so then who's doing this work mostly? And talk a little bit about swaggy stocks, because this is a sentiment read.
Yeah,
They-
effectively. Yeah. Effectively, it's like it's not, it's not like witchcraft or anything like that, right? Basically, it's tracking a metric, and the metric is words and keywords, and not necessarily like search terms per se, but like what is the most discussed in an environment where everybody is discussing it, right? And you use those places, right, where people are trading and where people are communicating to get an idea of what is being discussed, right? And that is crazy to even think about historically, right? Could you get into like all like in like just I don't know how many people were trading back in like 2000 here or maybe 2010, like to even think that like you could get to that type of information was like heresy, right? Like blasphemy, right? Like but now not only are people communicating with each other, they're communicating with each other openly, regularly, and that's like actually how they want to participate in the markets. So to categorize that information into usable metrics, like so visualizations, like he's done some of the best I've ever seen. And another one is Quiver Quant. Has done a good job over there but they do a lot of alt stuff. They do a lot of alt stuff with like plane flights. They got some crazy stuff. Like they've done a good job. They got like corporate jet use, different things like that. That's
you
real
can
alt
measure
data, right?
anything, right? You
Yeah,
can measure
anything.
anything.
Yeah, and so what is the stuff that's the most powerful? And sentiment like this, right? And if you look at Clove, right, and if you're looking at Clove real quick here, you saw that it spiked and it came back. It did exactly what we're just talking about. It got out this data, it came back, but it comes back to this level. This is a level that is kind of like the level, and the flows have stayed positive the entire time. This is very extended. So is this going to continue on? Well, I would tell you, Chamath, for better or worse, is extremely good at being visible and communicating his perception and his vision of what he thinks should transpire. And he has a large audience, and then a lot of people believe in the things that believe. This is not something that's new to the world of the markets. This is just something that is now much more prominent, right? Much more prominent to what's going on.
Well,
And
I could take the other side of that so easily that hero worship has actually kicked in. The Michael Saylor, the Elon Musk, to a degree, and I happen to respect Raoul Paul, these are signal making. Instead of market makers, they really are market makers from their signal, from their conviction. Whether you think he's high on coke, the Michael Saylor comments I've heard are like, oh my gosh, what a character. To it's a paradigm shift in macro thinking, and you want to at least listen and understand a little bit more about the whole Bitcoin thing. But regardless, their platforms are huge, right? Or genius of Elon Musk. The point is, whatever the celebrity CEO like Chamath, or the gurus, or the high conviction rollers, right? They have now got such a pulpit, and it spreads even faster, it feels. So I don't know, to me, I always like to kind of take that with as an actionable trading idea, but not an investment thesis, just because there's too much of this this hero worshiping that it feels incredibly.
well, yeah, I could say like what I'd add to that is you've got, look at Spotify, right, with 364 million users
Yeah,
on a
but that's
daily
a fundamental
basis.
fact. I mean,
And then you look at Clover Health with 50,000.
yeah.
Clover Health is what it could be, not what it is. And Spotify is what it is. It'd be a discount, not even what it could be, right? So what happens? You get some what word I call it? That's kind of, it's,
I call it dystopian.
yeah, well, it's not necessarily dystopian. The word is distorted for me. It's just a
Okay.
distortion to an extent. But we've got so much liquidity into the system, which we've talked about ad nauseum, right?
No, it's
Past
actually a little annoying. It's so much. I mean, the Fed balance sheet has increased 1,000% since 2002. The market's only gone up 600%. So we still have some catching up to do.
Well, like it's the fundamental change to me structurally, right? Like you got then you got the demographics of people getting involved in the market, and then like this is all awesome stuff for market participants, right? Like this is like the most action of all time to be in the markets, and there's just going to be more things that come to the market, like Clover Health, like my point, like Clover was a SPAC, the reverse deal, and then all of a sudden it's traded, and like here you go. So like it was not even available to be something that would have been in there to gone through the normal process in investment banking. Well, that's going to become less and less and less, and more things will be available. So this, I think, this becomes much more. We see much more regular action, right, in a lot of these names than we've ever thought possible as they come online, because so many more people are coming into the market, and it's not a national pastime, or even I don't even see this as a NASDAQ cycle from 1999. This is simply, the numbers don't say that. The numbers say that this dwarfs that on every scale, from size of new participants to the market. And I know there's a lot of folks right now that got just hammered in Doji and Bitcoin and everything else. And yet you're seeing a rotation right here into space and Futu, right? Like Futu's running like, that's a good looking chart, right? If it breaks up and out like that. I mean, this is like this is just a constant rotation, right? As long as there's no, index volatility that sucks down, names in mass, right? And so, which we just don't have consistent.
And honestly,
index
speaking of
volatility.
sentiment flow, I mean, today, Gronk comes out and it's like Gronks only go up or something. It was like, from the Patriots.
Well,
We're gonna go up. So the sentiment flow, if you will, of we're in a bullish market, is obviously feeding on itself. And then Bitcoin has almost gone negative for the year. I mean, relatively, it's still up big, but now 50-50, survey says some are still seeing it as a high hodling kind of concept, and others are absolutely out. They've been wrung like a washcloth, right, from when they came in last year. I say it trades beautifully like a commodity. It's got some basing to do, and it can have some vicious short covering rallies in between. But that's my style of looking at it from tradable setups across time frames. But that has got to be the epitome of a sentiment trade, is the crypto space, the 8,000 coins that appeared out of nowhere, right? I mean, that whole doji drama. And so to me, we have a sentiment-driven market. We have a liquidity-driven market.
Yep.
We have the Fed put, and the dollar weakness, which is obviously also a tailwind. Maybe not of late, but that's the bet. And in fact, that's a sentiment trade. Have you seen the bearish positioning on the dollar? All-time highs. Like they just expect the deval is moments away, and hence that heavy side of the boat, right, to me is a very bad idea. So I always look at the outlier. We talked about it a little bit last week with the put call ratio, for example, on financials. It was off the charts, skewed call side bullish, stacked. And yet that 0.06 is an anomaly, really. It's an outlier that needs to revert. So in the same way we had that Bitcoin sentiment blow off, 50% retracement, and it unwound a lot of these highly levered retail plays, right? Binance was bragging. We got folks that are 125% levered. Okay, that should never happen, but it does. And then you've got this same idea with, Tesla leading up into last year. With just they have a particular theme, and then they're done, and people forget it. They go look for the next one. There's just no patience to stick with something.
Yeah, I mean, if you're tracking, well, first there's quite a bit to unpack there, so I'll start one thing at a time. So the dollar, right? Like it's pretty evident that the choice of least resistance is interest rates remaining soft, right, for a long time, and then the dollar, whatever, just burn it right off. Now it's not going to zero, Like, that's just nonsense. People keep saying, like, because we've talked about it, it's a plumbing mechanism for the entire world. So the thing's not going to zero, but weakening over time is a highly likely play, right? Especially from the desired outcome of, the powers that be with fiscal and monetary, stimulus. So that's my take on the dollars. Like, I don't know that that's totally out. I mean, it seems like, I know we had the burn off last week,
Yes.
right? On Tuesday afternoon, Wednesday, Thursday, and Friday, into that really large options expiration for the quad wedge. And you saw a massive unwind and then a total massive rebound immediately. Like, this is positions were unwound.
I still see it in energy. I see it in financials, the bullish positioning, and yet I also look at the underlying fundamentals in oil, and it shouldn't be this high. It's an inflation hedge. It's a story stock. It's a story stock now of reopening, and
Right.
And supply demand and travel and all that stuff coming back online. But it's fascinating to me. It has, even oil, the commodity, has become a sentiment flow.
Yeah. I mean, everything's being traded, right? And like, everybody's thinking about it that way. I mean, most everybody you talk to is even thinking about it. From pretty much anybody you run into is like kind of getting involved in all this. And part of that's the phone, and the other part of it is just like, people are interested in it now, and it's available and it's accessible. And information is more readily available and accessible, right? So everybody can inform themselves a lot quicker. And then people want to know, right? So all those are good things, I think, at
Well,
the
they
end of the
also want
day.
the freedom not to have to go back to work, and
Yeah,
and
well,
definitely independence. So,
yeah,
and some have to. There's no question.
right.
There's desperate times and such. But the sentiment, aside from the market characters that are coming in, those that are manipulating, like Melvin, said to be in a position against Dogecoin, for example, and I forget who blew out in a London hedge fund because of GameStop. I mean, there are a number of players that are also getting taken to the woodshed that are hedge fund based, that played the retail game and lost.
Yeah,
And
I think,
Melvin's not a newbie. Like Melvin is.
for example, like, if you're just looking at large lots, right, there could be a massive amount of premium in small lots,
Yeah.
right? And to not assess that as both, right, like, you're missing part of the story. And then to calculate or not, totally underestimate sentiment. Public, the public.com, the app where you trade like whatever your friends are trading, right? eToro's follow the trader. Like, so let's just talk about like follow the trader, right? People are combining in on trade. That's just going to aggregate more trades to, that sentiment flow.
Yep.
Public follow like your friends. Like, everybody could be wrong, but F it. We're all wrong together, right? Like, so, I mean, that's sentiment, right? So like, it's everybody's in the same basket, shared information, right? And that, if you're not calculating those together, like in your assessment of like what's transpiring with the market, you get Melvin, right? Like, you get Melvin, like that group did in London. They got Melvin. Melvin just got bailed out, but Melvin got Melvin back with the GameStop thing. And how big is this? Let's revisit what happened in January. Robinhood was so big, systemically important, that they raised more money in 48 hours
They had to.
than they had ever raised ever
Yeah.
for their venture. So they got more money in 48 hours to meet their margin call than they ever raised prior to build Robinhood to what it was that day. Yeah. How big and systemically important is that to everything? Well, there it is, the story. And since then, they've increased their user base exponentially, and they had a little hit in they take some like bad press, but they could take all the like little hits they want here and there. People still want to participate. And so the more people participate without index volatility affecting liquidity, right? So the index volatility for everybody just sucks all the liquidity out. So if you get, because of all the ETFs holding, right, like 260 some or 250, somewhere in there, don't quote me, but like there's 250 ETFs that hold Apple.
Yes.
Right.
Yes,
and so there's like that thing is so like on top of itself with share float and everything else. So if they all get hit at the same time and you get a March style volatility spike, which you get, you do are more prone to get nowadays, then you get comprehensive, right, liquidity issues that just sucks the liquidity out of the markets. Everything gets hit. Sans that, right? Sans those liquidity doom loops, which we've talked about a lot, then you end up with rotation, and then you got all this sentiment. Then it's going to follow the rotation. It's going to follow the sentiment
Feeds
pockets,
on itself.
right?
So the rotation, however, we've had this for a long time. Something will, of course, come again. I mean, obviously, COVID was very much the white swan. Trump's tariffs, was another big event. But there will be something that comes in. And right now I see, this stock bond stuff that I do, it's getting really close to the surface. So this is when, and we talked about 70 style inflation, right? Months ago, and now they're talking, what if we get this structurally, not just the cyclical, quote unquote transitory, but what if this does have legs, et cetera, low, inventory of housing and raw materials and the issues between US and China, et cetera. So I keep going back to this. It's getting the risk parity, that portfolio before of stock bond inversely related. Now they're really tight. That happened also during the 70s. So at some point, something will trigger to set free more volatility. And it could be the dollar short covering, right?
Yeah.
Right now, the sentiment is we're going to devalue and Bitcoin's going to replace it or something, to that strange effect. But at some point, this dollar short has to be also unwound. We saw a little flavor of that after the FOMC meeting. I mean, that was a surge in rotation into the dollar, and it did some damage. Like, it will create volatility in equities if that continues. It's too early to say, but that was an unexpected sentiment flow. Let's put it that way. As soon as that quote unquote hawkish Powell presentation came out, they basically, exactly, hawkish. What was hawkish? They're gonna maybe go on a diet in 2 years. So anyway, this to me is always the job. You're looking at it. You're back to writing the juice, which I love. That's your sentiment read, right? You're putting all the stuff together and you're doing your blog. I got to start posting that again for clients because it's golden. It's funny, but it's also, it captures that flow across market structure. Love it.
We're bringing it back.
You got to. It's great.
Yeah,
I know you've been busy
funny.
with development, but now that you've launched and you're mobile friendly, you got an options matrix. You stuff is done. You can do this once a week. This is a good.
Yeah, for sure. Yeah,
but
so
you're studying it like I am every day. So
I would say, like, the risk is the rehypothecation. So the risk hasn't changed at all in the last 12 months, right? If anything, the risk is worse overall because it's just bigger, right? And so the risk mechanism is a doom loop. And so the doom loop mechanics, if anybody's heard this, is just literally short vol trade is really a big trade. And that's done by share buybacks, and that's done by outright shorting, right, volatility via VIX, right, selling calls, buying puts, synthetics, etc., where I'm literally creating yield by shorting volatility. Very dangerous trade and a very large trade, and it's a carry trade within the network of the market.
And for those who might not understand, though, real quick, like, you can short volatility because it's designed, if you will, as such, for 3 years and make money. And then in one day, you can undo 3 years worth of profits. It's that dangerous.
and people are doing this in huge size, especially port pension environment does this, right? They take this trade on. Funds that hold pension money take this trade on. This has been the best trade for the last 12 years. And so that trade, what happens is it blows. So, like, volatility spikes for some reason, right? Whatever it would be. There's many different reasons you could have the spikes. And those things spike and it clears out all those shorts, and then they have to start covering. So you get a greater volatility spike. And that's why you see vol just really spike. And this is very, very rudimentary explanation. So there's a ton of mechanics to this, but it's just a rudimentary explanation. Then because of the ratio of coverage for people to then protect, holdings, people start buying puts in excess and the indexes start getting hit. And so that positive gamma loop that you guys have, right, on a regular basis inverts to a negative gamma. And so volatility gets exacerbated. So volatility basically begets more volatility, which then flips the options market, which then eats the indexes. And the indexes have to start selling on a one time frame basis because of their mandate. So you just get this, why are so many people selling at the same time? Well, it's just the indexes are all selling at the same time every day. And that's why you get those, if everybody's watched in March of last year, you get 3 o'clock to 4 o'clock window, you just get these wipeouts, right? You're just getting wipeouts, just like mass liquidations because of the rules of the mandates of these ETFs and the indexes. So like that is the danger. So sans that, right? If that doesn't occur, you just get a lot of rotation and chop, and then you go to the next level. And so, what I would say is that as we continue and you see the volatility has to stay on a constant grind downwards, right? And if it doesn't, it starts to level off just from your chart perspective, and then just the options market starts to level off. And then you start to see it, create an upward bent, right? It creates that potential for it to, spike in short cover, right? Where they just blow out their shorts, just like everybody does with GME and AMC. But if you really want to see a short covering, right, the VIX and what that would do to everything. So, GME is isolated to GME. When the VIX goes, everything goes. And everything gets repriced. And that can be triggered based on foreign currency situation, like you're describing with the dollar. It can be based on oil. It can be based on inflation, where there's a mass repositioning in an instance of fear being introduced into the marketplace.
Well said. Yep.
Right.
Well said.
And everybody begins to reset their positions real quick. And the vol shorts trigger the whole thing because there's so much very large money in those trades. Now, the share buybacks were not involved last year. Like those had gotten full.
But they're coming back.
Banks had been blocked out from doing the same thing. The bank rules have eased. They're back in. The share buybacks are back in. Those are just natural.
But we have
those are natural vol suppressors.
We have another sentiment backdrop or threat, which is antitrust. Again, it has not ever been followed up. So right now the market doesn't care, but that would become a sentiment flow, I'm sure, if that was to actually get some teeth. We'll but otherwise,
I mean, there's like
for big tech, there really isn't a risk except for higher yields, and they have stayed neutered.
Yeah, totally. I think the summer, we had said last week when we were talking, we said if the market came back and broke certain levels, it could get into this kind of chop fest for the summer.
Oh, well, I'm still in that.
It came back. August. It got into certain levels, and it's kind of in a choppy situation. What's fascinating is this week you see all these small cap, all those plays we were just looking at, the momentum stuff, and you see the small cap rebound. And if this doesn't get quashed pretty quick, right? Like this can get higher. We're going higher. So
oh my God, this literally, I was in such a bloody zone last week, and this NYSE, which has just been a fabulous tell. I got to show you this chart because it's driving me absolutely insane. I have to show you this chart. This is just an example, but in my this talk about sentiment. What's going to kill the market? All right, so real quick, this is the NYSE, which is, big picture, kind of the IWM. Think Russell, but it's a very chartable index for those who are into kind of intermarket stuff. So I have been really following NYSE as my to size up underlying strength and weakness, because sentiment on the surface has been very, very bullish. And, I've shown this before, right? We started to round over, and then we did. And then this is what we bounced and had today, right? So this is from Monday. Huge bounces. And then under the surface, though, we still have weakness across the board. SPX, cumulative volume, the stuff that I use in my risk indicators. And then today happened. So we had this gorgeous rollover, gorgeous. And you can see it more clearly, obviously, in the Russell, but same idea, right? But look at this 2 bar reversal. That is a complete rejection, or I should say, it absorbs all the sellers. Boom, eats them all. Eats them all. So the sentiment in this market is just really hard to kill. Now, if we were to break some, trend lines and such, I'd be all excited again, because I think a
I
two-way
would go so,
market is
yeah,
healthy.
I would go so far as to say no one believes the liquidity is coming out. That's the net
Yeah.
answer, right? Is that like your positions are cleared out, give them to me, we'll go higher. And money has to get long. New money has to get long. Like money itself has to get long. People like have to get long. And you don't have you don't have everybody rolling into the visor going, hey, short the indexes for me. Like,
Yep.
it's just not the way the system works, right? So people are net long all the time for the most part. And the belief is across the board that no, you're not. Like you're not taper. Taper. Okay. Right.
Forget taper.
And inflate, and then the fiscal, right? Like y'all aren't going to keep doing fiscal. Okay. Right.
Forget
And so I think
fiscal.
that's the consensus.
Man, did they do a great job. I got to give them credit. So they wanted to flatten this yield curve. For anyone who's into that macro stuff, they just did it brilliantly. And that put the deflation in the inflation trade. So this is the 2 and 10-year bonds. Anyway, it's steepener. This is where we were and this is where we are now. I mean, they know how to deal with this inflation risk, right? They're going to make it transitory come hell or high water.
Well, the other thing is there's
Flatten
been a
that curve
big
right out.
there's been a big suck out in crypto. And crypto has been a risk kind of environment, like an inflationary type environment, where asset inflation has occurred and then been sucked out. And I'm not talking about I'm just talking about price and asset and inflows. And so you had a lot of asset inflows in the run up, and like now it's been sucked out 60% in some things, 80, 90 in others, and that could, what I see more than anything is like in the absence of index volatility, then you just get subsector volatility. Like we just looked at in plug that went up, thousands of percent, it came back down 75%, and it's still sitting above its auction level before, and it's gonna, maybe start a new leg up. Like it's just pockets of that same type of volatility that we're seeing. And so, it's almost like I don't want to say that I don't want to get cursed with like, he's the guy that said new normal. Like, then we got to crash. But like, it's not like a new normal, but it's like a bigger basket of market. That's how I would describe it. I don't think there's ever a new normal, because I don't think there is a normal. But like, it's just like a huge market. And because of the liquidity, just for perspective, is like, what, 12 trillion or something like that in the last 12 to 16 months in the United States alone, not to mention the rest of the world. That money, it found its way into the system, and you got this like bigger market. And so it just is a bigger market than it ever has been overall. And that's finding its way into a lot of different things and creating a lot of volatility in pockets so far, not in the overall index, but just in pockets. And maybe that is more of a norm going forward, at least in the short to intermediate term, is that we get pockets of volatility, which are very advantageous for buying and selling in the interim. So like if you were shorting plug and then you want long plug, right? That window, which is 3 months one way, 3 months the other way now, is like great for trading, great for intermediate term stuff, swing stuff.
But
not good for investing, right? Not good. It's gonna be hard to invest.
I'm not worried about any time frame, because there's just so much good information that we can access to kind of figure out what's going on with individual stock picking or sector rotation or the overall market. But on the sentiment flow alone, I mean, versus what we kind of look at separately and together, with these themes, whether they're macro, or strength and weakness underneath the surface, which is kind of a key ingredient to my risk indicators, right? And that
Right.
whole volatility, kind of sponginess, if it sticks or oozes out, you can kind of see it in regards to the risk indicators, which have been that's cool. But I'm talking about the sentiment flow that retail traders can have access to, because we're looking at cross discipline, right? We're looking at all sorts of activities, and we can read option activity, right? We can see, how a chart is looking. It needs to break certain levels, and then we can see the optionality, if you will, grow, and the IV starts to get busy, and then it's in a squeeze, and everyone then jumps on it. But I'm talking what tools, other than learning option flow, other than learning tape reading, like actual, the underlying stock, you can see buying and selling in dark pools. You can see the option, which I like better, by the way. I really like studying option flow for sentiment, because it's, national best offer. So you can really tell a lot more, in my opinion, how they're positioned. If it's just chasing with the near dated stuff out of the money, you get a lot of cowboys and cowgirls. If they're putting down a stake, like the energy and the financials, they really see some benefit here for that particular sector continuing. We got a little washout last week. They came right back in, or they didn't sell. So what are you using for tools?
All right. Let me share my screen again.
Yep.
All right.
And Grant will answer your question about where do we actually research information on a given stock, because I think mine's going to surprise you, at least where I get a lot of my information versus what we're talking about right now.
So there's a lot of different things. Like you're tracking like specific, like we got a lot of different tools. So we've got obviously we've got our app that we built, right? And that's got the options data, from a perspective of what is happening today, right, in the market. And you can build watch lists for all that kind of stuff. We have pre-built.
This to me is the best sentiment tool, because people are putting their money, not what they're typing for keywords that are coming up, because talk is cheap. Option flow is the ultimate.
Well, and what we've done too, so like, not to belabor that, but like you've got like the tool to set it up, and then the alerts are really, baked in there as well. You can create your own alerts inside the app. But what we've really done in the last couple of weeks is to tie it into, your watch lists, and are continuing to cross-pollinate that to where you're going to start to see like heated perspectives. Like if you're looking, this is just an options list that I've built that'll be pushed to everybody that's got the matrix in the next week or so, or probably less. And like it tracks, most of the most heavily traded options on a daily basis. And you're going to be able to see kind of some major, like what she's talking about, stakes in the ground, both from a short term, medium term, and long term. And all these are hitting, that individual symbol every day, right? So I can look at CRM for Salesforce, and I'm going to be able to see, block after block after block after block that meet certain criteria. And you're able to build all this stuff if you like have specific criteria that you want that to be notifying you of. And this is where it starts hitting your phone, and it starts hitting your watch or whatever it is. Those push notifications can go out for this too. I'm just showing you like a perspective on like, here's this list. Here's all the ones that we're seeing a lot of options activity that was large, sizable, at like, high energy, puts or calls. And then we're going to score this to give you kind of a sentiment score on those puts and calls as it relates to. But you can see just in genuine take right here. Like I saw a ton of stuff for Salesforce.com the last 2 days, just massive amounts of options activity from just a raw perspective. So if you're looking like, I want to create my own watch list, I got these names, I wanted to let me know if this criteria hits. These are like really, really powerful tools, right? Boeing has had massive amounts of activity, and it's calls, 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 like a lot of call active. Very interesting. I don't know what transpires, but there's a lot of different ways to skin the cat, right? When you're looking at this type of stuff, this is a watch list structure. You can build watch lists in the app, and they work over in the live charts on the matrix. But like, this is like, when you're looking at this, you got the scans that look at everything, right? You've got the scans to like the entire market for the day. You've got the scans that look at a sector, right? So maybe I just want energy explorers, for example, and it tells me what's happening in energy explorers from unusual activity, these unusual activities. Or I'm looking at what I want to look at, right? I'm building my own watch list, and I've got things that I'm trying to monitor, right? And I want to see what that action looks like, and then drill into the details on that action. Like NVIDIA has been nonstop the last couple of days, right? Like nonstop with a lot of action. So there's something going on over there. So like, yeah, it really depends. Like, truest sentiment is where the money before where your mouth is, right? And the largest money is in the options market right now. And then we're also adding to this this type of stuff where you also have you have the actual underlying security alerts that are hitting this too. So as I get this dialed into, like, consumable, so it's not overwhelming amounts of information, we'll drop it into everybody's app on the next week, and that's very actionable, hitting your threads. Like if you look at this, like this hits your threads, that's in the app and on your phone, and on that pulse that's on the phone that people have been getting. So like, I'm partial, we use our own app, right? Like
Yes, because yeah.
And it's but like, if you look at, like, because this is like, if you want to do the research, I know the guy had asked about research, like, so I'm looking at AMD. I don't want to go to AMD and like look for stats and all that stuff. So like, you can just click this right here, and it'll tell you all about AMD. So the qualitative stats, the ratios, the financials, trends, like how it's been performing, et cetera. If you're looking at ETFs and so forth, we have all the holdings, data, and information, and all that's available on the phone as well, right? And that this information I just showed you is all free. So like this stuff, the options matrix, all that's obviously in that options matrix app, and that's in, it's in here. It's just turning it on. But all that research and fundamentals and ref stuff, that's all free. We give that away to everybody, so you should be able to use that if you want to search for stocks. If you're looking, and we're putting in stuff like with the sentiment about, like, gainers, biggest losers, like what's being chattered about today, and all that kind of stuff will land on your dashboard. So we are trying to do that, like to bring that more of in a Spotify deliverable, and that's happening in the next couple of weeks, right? So it's already working on the phone. That's like there on that down the dashboard on the phone, and there'll be more and more comes to that, right?
But you have what's it called again? Not the Wall Street Bets scan, but
Roaring Kitty scan.
the Roaring Kitty scan.
Yeah.
All right. So this picks up that sentiment flow of options coming in, bullish or bearish, the top 10, let's call it.
All
right. So you've already done it. You've done a really good job of already trying to anticipate sentiment flow from the standpoint of those who are literally trading it with real money. Where else, for those who like you said,
swaggy stocks, right? Like is great for like looking at sheer sentiment, right? Like he does a great job on that. That's a free site.
That was amazing to me that right. It was definitely free, and they have some, that's the alt data that you're talking about. Fact trends, weed stocks, penny stocks, crypto trends, news trends. Got it.
Yep. Them, and if you want like due diligence stuff, like single stock reports, like things like that, where guys ladies dig into single stocks, right? Swaggy does that, and so does Alpha Investors, right? So that's at Reddit Investors. Those guys do a great job. They, single stock, like kind of sizing up. They do a lot of Russell small cap stuff. Okay. So Alpha Investors, and then like QuiverQuant's got great data. Alt data, and they have some free stuff. That's some free stuff over at QuiverQuant, if you're looking for that alt data. But like, the single stock research due diligence pieces, that's what I would say. You got all the trend stuff locked down, so like you do that better than anybody. And then you've got like that's probably the best I could point out, because I just don't do a lot of the single stock just is limited to time. I don't have a lot of
Okay.
time to evaluate folks.
Got it. All right. So that's, I'm just putting it in chat for anyone who's interested. This is the Twitter handle for alpha investors. And they also have a letter. And
Yep.
then, yeah, they got a blog. And then there is, yeah, let's build your audience. All right. So,
Swaggy stocks. Yeah. Yeah.
yeah,
Go to Alpha Investor. If you go to Alpha Investors, like let's see what the page is for that. I'll send it to you. I'll put it in the chat real quick.
all right. And so this is for Swaggy for those who are looking at that kind of, I mean, they got a lot. Wall Street Bets, Options Max Pain, etc. All right.
Yeah.
So is Swaggy on VigTech platform?
Not yet. We're working on it right now. Be in the
Perfect.
next 2 months. Yep.
Perfect.
Yep.
All right. Because they're, yeah, I'm on their email list, and I definitely like to kind of like
Great stuff.
get
Yeah.
a
Yeah.
feel for what's moving.
Yep, and that we're gonna be able. We're working on them to put that into the application. So like that's and also news, right? What's moving, all that kind of stuff is coming in the next 30 days into the app. So you'll be able to like create your own curated news channel inside of our app, and it'd be your phone, you need notifications, whatever, the stocks that you want to track for movements, for channels you want to follow, things like that. We'll put all that in there because I know a lot of folks want news. So we'll have that in there as well.
All right. So when, just to answer Grant's question, where do you find your info if you're researching a single stock? And I have a very different approach to it. So it's going to be, I'm probably going to surprise people with how I do it, but I run a live trading room. So when I see something moving, like for example with DDD today, which did, shoot up about 30%, and a client in the room says, "What's up with DDD?" I literally go to, I have TweetDeck, and so I have lots of columns set up by macro or swing trader or day trader options. I've got all my columns, but I don't just go to the universe of, typing in DDD. I will go to those I follow because I respect their intel, right? Because I've already done this curated list of people. And so then I will grab the information because they're usually on it first. I'm lucky that I've spent years putting together my Twitter follow base, which to me has the best information for either real-time news or option or macro, that whole thing. So that's actually where I go, is I will type it in, but I will do it based on the people that I know. So I'm not going to the whole wide web or Benzinga or Yahoo or whatever, that clearinghouse of information, which is lots and lots of data, but it's not context. So I want to be able to make a really quick decision if this is worth my attention so that I can size up a trade for clients. And so I typically will have a kind of a curated list. That's how I do it anyway.
I would say like my take on it is what's the reason that you are looking for it first?
Mm-hmm.
Like, why are you looking for it? Is it because somebody said something about it, or is it something you liked and would like to learn more about? Is it like a fundamental reason you like it, right? And then you got to look at the way the market is structured. That's just my always default, right? Because it's like sentiment of the overall market drives everything. So if it's like hated, but it's something that's so solid, you got to assess that too. So you got to like check, is this really something that is in a good trend, or is it against the trend, right? Because stocks don't always go up, right? Like some stocks get delisted, that they may have had a great story. So, the markets are such a different perspective than like maybe a private investment or something like that. The trend and the sentiment and the market structure matter a lot to how they play out. So like I always default to looking at that stuff a lot first, but I'm not spending a ton of time single stock picking.
I am.
Obviously, like, and you are. So I would say, default to Samantha. right? What she's telling you probably way better than what I'm telling.
Well, no, it's because I have to do that custom engagement thing, right? So they're
Yeah,
asking about a trend or a chase, and then I need to go find out if it's not just technically sticky, but if it has some bearing behind it to give it that kind of sentiment flow. Because
yeah.
if they find out that DDD has partnered, with a company to offer support for breast implants. Somehow I think there's going to be like a sentiment flow around this, and there's going to be like maybe a continuation of the trend of the chase. So that's why I'm looking it up. But in any case, this is the fun part of running a live trading room. You never know what's going to pop up on the radar for the day, and the day changes. But be careful of those parabolas. That would basically still be on a sentiment, because
Yep.
I am, what's it saying? There are old traders, there are bold traders, but there are no old bold traders. Well, I don't know if you
Good.
subscribe to that, but the point is a nice 45-degree angle, just like this, is the most beautiful stock in the universe. Not the one that goes straight up,
Yep.
tops, traps all those longs, and then opens 50% down. Not my cup of tea. I get asked about it every single day in my trading room, like that GBR. It was stunningly gorgeous. Oh, that's nice. But can you get out?
Yeah, at least the paper hands. Right. So
Exactly.
yeah,
But
totally.
can
That's
you
great
get
advice.
out? All
Yeah,
right, so we're going to leave it there. I think everyone will have this next Tuesday, and then we got break for a week, and then we'll do this every other starting July and August. So, and congratulations on the mobile release. It looks fabulous.
awesome. Awesome.
Very
Yeah, thank you.
exciting.
Yeah, and there's more cool stuff coming, and
Can't
just
wait.
keep looking for it, and it'll keep coming out. All right.
All right. Thank you, everyone. Again, this is going to be on
Bye, everybody.
podcast, this interview. It will also be right here on my YouTube channel. So check it out and come back again next Tuesday. And yeah, thank you very much. Have a great week.
Take care.
Bye.